Hey, it's Patti Scharf, CPA and co-founder of Catching Clouds, the leader in e-commerce accounting. Today, I'm going to talk about Profit First by Mike Michalowicz. Actually, I looked up how to say his name because I kept butchering it in all the other videos. Anyway, I want you to stick around to the end because I'm going to show you how we apply this using Xero in our own firm. But I need to tell you a little bit about the book. This isn't going to be a review or a summary necessarily of the book, but I do want to give you enough information so that you see where I'm going when I show you how I do this in Xero. All right, so let's get started. So I read Profit First several years ago. I know quite a few accountants who are either friends with Mike or they are certified Profit First professionals or both. And I just kind of wanted to see what it was all about and what was going on. And as I was reading it, I noticed there was a lot of personal finance concepts in the book. And I think it's great. I think he did a great job of pulling together all these different concepts and bringing them together for a business owner to understand how cash flow works and how to set themselves up for success financially with their business. The first one is pay yourself first. So maybe you've heard this like when you got your first job or something like that and they had a 401k and they said, hey, you need to put aside, 10% or as much as you can to have it come out of your paycheck. You won't even see it. You won't spend what you don't see. That concept is really critical in Profit First. The other concept that I noticed just kind of jumped out at me is the envelope system. So let's say you were making $2,000 on your paycheck and you had to pay for rent and groceries and clothing and fund money and stuff like that. What they would say is, hey, until you're familiar with how to manage your finances, use it all with cash. So you go to the bank, you get $2,000 out, and you get a bunch of envelopes, and you put $100 here and $500 there and $200 there for all of these different purposes. And then when you need to buy something, you only use the money that's allocated for each of those individual things. Again, great concept, especially if you're just learning how to manage your finances. So all of this is pulled together really nicely for a business owner to help you understand how to manage cash flow, how to make sure that your business is profitable from day one. He also talks about concepts like debt and setting up an emergency fund and different stuff like that. I'm not going to go into all that. I highly recommend you read the book. I think it's great for everybody, whether you're a seasoned professional or not. I think it's got great concepts in there and he does a great job of pulling everything together. There was one thing that he suggested that I thought was logistically burdensome and somewhat unnecessary, and that was the idea of setting up different banks. So what he was saying was create a separate bank account at a different bank from where you normally bank and set up a bank account to collect profit. Set up another bank account to collect money for income taxes. And don't touch those unless you are specifically like it's distribution day for getting some of your profit out or it's tax day and you need to pay your tax bill. Otherwise, it needs to be at a different bank so that you're not like borrowing it, for other purposes, for operating expenses and things like that. And he's saying that if it's at your own bank, then it's going to be too easy to borrow money from there. So I guess my first reaction was a little bit judgmental where I'm like, hey, you're in charge of a whole company. Just pull up your britches and do the right thing. If it's for taxes, don't spend your tax money. But I realize that sometimes that's easier said than done. And so I understand where he's going with that. And I think that he's on the right path. But me as an accountant, I didn't want to go through all the hassle of setting up a separate bank account and paying associated fees and all that other crap. So what I did is I came up with my own method and I want to show you how I use it. So this is how I do it in Xero. You can do it in QuickBooks Online. You can do it however you want, but this is how I do it. All right, so I've got a couple of different accounts here. I've got one for the checking account, one for the payroll account, and one savings for operating expenses. Okay, checking account is just where all the money flows in and out and whatever. Payroll is only for payroll. I will keep 1 month's worth of payroll in there at the most. Usually I only keep the next upcoming payroll amount in there. And then everything else is going to be sitting in the operating expense savings account. So it's collecting savings, interest, and things like that. So let's say you get a payment from your customer for $10,925. It gets deposited into your account, you code it to sales. Actually, in this case, $10,000 is sales and $925 is sales tax that you've collected. Now, we don't want to spend that sales tax, just spend it. We want to make sure that it's there when it's time to pay in your sales tax liabilities. So the first thing I did is I transferred all of this deposit over to the operating expense savings account, okay? So if you go look at the savings account, you will see a deposit over here of $10,925. You can do this online, super easy. Okay, so here's what I'm doing. The first thing I want to do is segregate that $925 and set that aside for sales tax liability. With the other $10,000 that came in, I want to split that up into the different allocation percentages that I've identified for my business. So in this case, in this example, it's going to be 15% for profit, it's going to be 25% for owner's compensation, it's going to be 15% for income taxes, and the remaining 45% is going to be for operating expenses. So when I go to profit first allocation, here's the $925 that I've set aside, okay, and I've set that up in a current asset account called savings sales taxes. So this is going to show up on my balance sheet, right? And then with these three other ones, profit savings, owner's compensation, and income taxes, I set aside 15% for profit, 25% for owner's compensation, and 15% for income tax. All the rest of it is going to be sitting in operating expenses, okay? So now I've got $4,500 sitting in operating expenses, which non-coincidentally is 45% of that $10,000, okay? And then I can just transfer this back to the payroll account when I need to use it. I can send it to the checking account when I need to use it, and everything is good. Now, why do I do this? Why do I go through the hassle of doing this? If you look at the dashboard, you will see, here's the $3,000 that I transferred to payroll. The checking account is basically where it was to begin with. And savings account, you'll see, only has $1,500 in it. But if you go to the balance sheet, you'll see the actual balance in the savings account is $7,925. And you may be going, wait, what? Here's what I did. If you drill down into that savings account, I have balances for each of those different ones. Okay, let me show you how I got there. Okay, so if you go to the chart of accounts, you'll see that I set up these different current asset accounts. I set up one for profit and one for owner's compensation, income taxes, sales taxes, emergency funds. Okay, then I went to the balance sheet and I edited the layout. So edit this layout, and then I selected all of these accounts and I grouped them into an account called savings account. So I created an account that's called savings account, and when I set it up, I checked this box that said show summary only. That way you won't see all the details of all of these accounts. You'll just see the one savings account number, okay? So when you're looking at your dashboard, you only see the amount that's left in the operating expenses savings account because everything has been transferred to a current asset account. So they're actually not in here. If you look in here, it's all been moved out as a spend money transaction or been transferred to another bank account or something like that. So there really is only $1,500 in this savings account according to your accounting. But then when you look on your balance sheet, you will see the true balance that's in your savings account. So this should actually match what you see on your bank statement with the bank, because all that money is still in the bank. It's just you've earmarked it for a different purpose, so it doesn't show up on your dashboard. So hopefully, when you're looking at how much money you have to spend, when you're looking at your dashboard in Xero, you know, oh, I only really have $1,500 left for my operating expenses. So there are advantages and disadvantages to this method, as you might imagine. Advantages are you don't have to deal with all those different multiple bank accounts. Another advantage is when you look at the dashboard, you're you're not seeing all that other savings, so it does achieve that out of sight, out of mind kind of a thing. But the disadvantages are it's really easy to get to. Like if you're managing your books by looking at your bank account, which I would never recommend, it's going to look like money is there and available for you. So you really need to trust your accounting. And then the other downside is you have to kind of stay on top of it. There's some ways of combating that, and actually Mike Michalowicz talks about that in his book as far as how to handle your bill payment situation and things like that to keep it kind of manageable and under control. But this method works a lot better for me. One of the ways that I manage it that requires a little less headache and administration, which maybe you might want to wait until you're a little bit further along in your journey, is I'll just see how much money is a good balance to keep in my checking account so that I know I'm not going to overdraft stuff. Let's say $3,000 or $5,000 or $1,000. I don't know. It might be different for your business. And then I keep just one paycheck's worth of money in the payroll account. Everything else gets transferred to savings account. And then I allocate it out based on percentages and things. And that's all there is to it. I hope you found this video helpful. If you did, please like, comment, and share. If you haven't already, please subscribe, and I'll catch you later.